Hey everyone, this is Dan. I'd like to tell you about the three recovery stocks that I've been trading to make quite a bit of profit in the last few weeks. The three stocks are RCL, Royal Caribbean, JETS, the Airlines ETF, and LUV, Southwest Airlines. These three stocks are all travel related. They dropped significantly at the start of the pandemic because people are afraid to travel. Now that the COVID vaccines are being rolled out in the US and in the rest of the world, and that the pandemic seems to be gradually getting under control, these travel-related stocks are starting to recover. Let's look at the chart first for Royal Caribbean. As of yesterday, RCL, Royal Caribbean, closed at $96.66. We can see that ever since the pandemic crash bottomed out around March 23rd, RCL has been supported by this trend line, the upward sloping trend line. And then in the last 2-3 weeks, it's been following this triangular pattern, and then finally about a week ago, it broke above this triangular pattern. If you look at the technical indicators, a few days ago, we saw a buy signal from DMI, and then about 2-3 days ago, a buy signal from MACD. That means these two indicators are pretty helpful for guiding us on how to trade RCL. In the meanwhile, we do have this warning signal from ISI saying that the stock is overbought after this phenomenal rise in the last week or so. If you look back in the last few months for a similar situation, we can find it here, and of course the price peaked out here temporarily and then drifted down for about $10-15. And then there's another one here. It hit the peak and then came down for about $20. If you look at the rate in which it was rising in the last few days, it corresponds well with how the rate was rising back then, which was May of 2020. Therefore, I expect for the short term a pullback of $5 to $10. And sure enough, it's the morning of February 25th now. Indeed, the price has come down a few dollars. But I'm not worried about it because I think the momentum is strong and the world is recovering from the pandemic. That's why I believe the price will continue to go up. If you look at where it might be in the next few months, we can use this as a reference point, which is the peak before the pandemic crash. And it was at $135.52 on January 17, 2020. Between that point and where we are now, there's a gap of 40%. That means there's a 40% upward potential for RCL in the next few months as the world recovers from the pandemic. Let's look at Southwest Airlines, stock symbol LUV. Yesterday it closed at $59.29. It's been following this pattern in the last few weeks. It's a triangular pattern. And about a week ago, it broke above this triangular pattern, which is a very bullish sign. Although it's going up so quickly that we are approaching the point where we have a blow-off top. That means the price might be coming down a little bit in the next 2-3 days. After the consolidation, I'm pretty sure the price will continue to march up. But for the short term, there will be a pullback. Now, if you look at the technical indicators, again, we have a buy signal from DMI about a week ago, and then another buy signal for MACD about a week ago also. So those two indicators are really good for guiding us when we do swing trades on LUV. And then in the meanwhile, we see this warning signal about the stock being overbought. Last time when we had this overbought signal was back at this point. That was back around June of last year. The price went up quickly, similar to what happened in the last week. And then after it peaked out here, it came down for about $12-13. And that's why I expect the price to come back down for about $2 to $5 in the next 2-3 days. After that consolidation, I'm pretty sure the price will continue to go up again, similarly to the Royal Caribbean stock. Where is the target? Most immediately, we should be aiming for this peak level. That was back in October 2018 at $63.50. If you look at the difference between today and that peak level, there's an upward potential of at least 7%. Since Southwest Airlines is so strong financially, I believe it'll go up even more than that. I'll talk about the details later on. Before we move on, if you like what you've seen so far, I will appreciate very much if you can click the like, subscribe, and notification button so that you will be notified when I post a new video in the future. Let's look at the chart for JETS, the Airlines ETF. Yesterday, it closed at $27.02. We see this triangular pattern. Also, there is a bigger picture of an upward sloping trend line here. But then about 3 weeks ago, it assumed this triangular pattern, and then it broke above this pattern. Again, it's a very bullish signal. We saw the buy indicators from DMI and MACD. We also see a warning signal from RSI indicating the stock is overbought for the short term. And if you look for a similar overbought situation, we could find it here. That was June of last year. The price went up very quickly, similar to what we have in the last few days. And then when it peaked out here, back in June of last year, the price came back down just about $20. And that's why they expect the pullback in the short term for at least $2 to $4. And sure enough, as of today, this morning, the price has come down a little bit. As far as the target to reach for, most immediately, we should be aiming for this peak before the pandemic crash, and the peak was on January 17, 2020 at $32.25. The distance between where we are now and that historic peak is 19%. That means we have a 19% upward potential, which is pretty good. Let's look at the recent significant events that might have affected the stock prices. On February 22nd, a couple of days ago, the Miami Herald reported that the bookings for Royal Caribbean has gone up very quickly. They saw a 30% increase in future bookings. And that's because there's been a pent-up demand for people who want to travel but could not in the last year or so. That's why they are starting to book cruises already, anticipating receiving the vaccine shots. Some of my friends already booked cruises as well. And then on February 23rd, the Bloomberg News reported that the airlines bookings are surging as well, especially in light of the fact that UK is planning to reopen travel and reopen their economy pretty soon because of the effectiveness of the vaccines that are being administered in the United Kingdom. We'll look at the data later on. Now, if you look at the world COVID-19 information, this is for the whole world. If you look at daily new cases, what's been happening in the last month or so is that there's a dramatic reduction in the daily new cases to the tune of a 60% reduction. That's a very clear indication that the pandemic is gradually getting under control. If you look at the countries where they have the most number of people vaccinated, first of all, let's look at the US. In the US so far, we have about 20 doses administered for 100 people. And that means 13.6% of the population have received the first dose, and then 6.2% of the population have received the second dose. In the US, as you know, the Pfizer vaccine and the Moderna vaccine have been rolled out. And that's why people need to have 2 doses each for the vaccines to be fully effective. In the US, in the last 3-4 weeks, we see a 75% reduction of the daily new cases. That's very impressive. That means pretty soon it's going to get to almost near zero. United Kingdom, they have on the average 28.3 doses per 100 people. Their reduction is even more impressive at 80% almost. In Israel, where they have on the average of 86 doses administered per 100 people, the reduction is in excess of 70%. Also very impressive. These are evidence showing that the pandemic will be under control probably by the end of June or the latest by the end of September, at least in the developed nations, and then soon after that for the rest of the world. This is definitely going to be very good for the travel industry. There was a report published by Morgan Stanley back in October of 2020 predicting the rise in passenger kilometers traveled after the pandemic. They provided 3 scenarios. The base case scenario, which is here, and you can see that they expect by the end of 2021, we'll be back to the pre-pandemic level, and then it will continue to grow, just like what it's been growing historically. There's a more bullish scenario, which is a lot more positive, and then a less optimistic scenario. No matter how you look at it, the situation is going to improve significantly. People will be traveling more. That means the cruise ships and the airlines will be realizing much better revenues and profits pretty soon. And that's why I think it's good to have those recovery stocks at this point. The other way I look at it is that these airlines and cruise ships have been losing a lot of money last year and early this year. Some of them might go out of business before they can recover. The most important thing is that we want to pick the strongest among these companies because it's really the survival of the strongest. This is the list of the top airlines in the US. Even if 2 of the airlines went out of business, the rest of the airlines will survive very well because they will be taking up the market share of the airlines that went bankrupt. And that's why by picking the strongest airlines, in this case, it's a Southwest airline with only a 13% bankruptcy probability compared to the other airlines, which have higher probabilities for bankruptcy. And by the way, the data is from this website by the name of macroaccess.com. That's why I decided to buy the stock from Southwest Airlines. Similarly, if you look at the 3 leading cruise companies, Royal Caribbean has the strongest probability for survival or the lowest probability for bankruptcy at only 31% compared to Norwegian with 45% and Carnival Cruise at 37%. And that's why I picked Royal Caribbean. And then I picked the airlines ETF Jets. That's because it's not possible to have the entire airline industry to go out of business. So even if 1 or 2 airlines go bankrupt, the industry will continue to survive, and that means the ETF Jets will continue on, and it will continue to go up as the economy in the world recovers. Now, this is the part where it's not that rosy anymore. In the spirit of full disclosure, I need to share this information with you because we need to be able to understand what kind of risks we are confronting so we can manage our risk properly. That's always my philosophy in doing investment, and I'd like to very much urge you to try and do the same. We need to manage our risks. The stock market is not going to go up and up forever. We got to get realistic about that. This is a summary table showing what the professional analysts have been saying about Royal Caribbean. First of all, I repeated here the closing price yesterday for Royal Caribbean, which was $96.66. And the historical peak that we're aiming for is $135.05. Yahoo Business gave Royal Caribbean the average target of $71.09, which is well below the current closing price. Louis Navellier, the analyst, gave Royal Caribbean an overall rating of D, and that's a sell rating. He's not bullish about Royal Caribbean at all. TipRanks.com gives Royal Caribbean a hold rating, and the high target is 117, a little bit higher than where we are. Average target is 74.22, below where the price is today, and the low estimate is $48, which is much lower than where we are today. CNN Money gives Royal Caribbean a hold rating. The high target is 110, medium 76, low 48, and TheStreet.com doesn't like it at all. They give Royal Caribbean a sell rating. What I'm seeing here is that based on fundamental analyses, these professional analysts do not think very highly of Royal Caribbean at this point. That's understandable because Royal Caribbean has been losing billions of dollars in 2020 and in the beginning of 2021. That's why if you add the numbers together, they just don't add up. This company has been bleeding money. However, the important thing is survival. If Royal Caribbean can survive this pandemic, which they will, as we already saw in the probabilities for bankruptcy among all the cruise liners, and when we come to around the 3rd quarter of this year, when the bookings start to shoot to the moon because there's this huge pent-up demand for people wanting to travel, they will be taking in a lot of revenues. The bottom line will be very good, and that at that point, around September timeline, these analysts will revise their ratings. We have a similar picture for Southwest Airlines. The current price is $59.29. The 2020 peak we're aiming for is $63.05. Yahoo Business has a target of $57.37, not too far from where we are today, so that's not too bad. But Louis Navellier gives them an overall F rating. That's definitely a sell rating. And then tipranks.com, moderate buy, high target of 65, a little bit higher than where we are, average of 58, just about where we are, in low 51. CNN Money, buy rating, and they really like Southwest because Southwest is a very well-run company with very high customer satisfaction ratings as well as very strong financial statements. That's why CNN Money gives them a buy rating with a high target of 65, medium of 58, and low 44. TheStreet.com gives them a hold rating. It's not all very bad, but it's not very bullish either. We don't have similar ratings for the ETF jets, but looking at how they rate Southwest Airlines, I would say it's probably the same. At this point, the ratings and the calculations based on fundamental analyses are not very bullish. But at this point, we really have this aspiration aspect of people anticipating the travel industry to recover. So most immediately, they will expect the industry to return to what it used to be before the pandemic crash. And that's why I believe it's reasonable to aim for the peak levels right before the crash. This is my conclusion. First of all, the stock prices of these three stocks or ETF will continue to go up as the pandemic gets under control, which it will because of the effectiveness of the vaccines. And the 2020 peak levels will be the strong resistance level. And actually, the prices will probably start pulling back a little bit within about 2-3% of those peak levels. The prices are somewhat frothy now based on the traditional fundamental analyses, but so are many other stocks. And one of the reasons is because the Federal Reserve Bank has been buying a lot of assets to the tune of $3 to $4 trillion since March of 2020. In other words, they're creating a lot of money which has been pumped into the market, and people have been using the money to buy stocks and thereby bidding up the prices of stocks in the market. So the water level goes up, everything floats upward. And that's what's happening now. And we need to be mindful of the technical indicators for short-term and long-term pullback. For example, when we see that warning signal from RSI indicating the stock is overboard, then we should expect a short-term pullback. Then when RSI gets to a more reasonable level after the consolidation, it'll start reach for a high level again. Those are the things I watch for when I do swing trading. For a stock like RCL or LUV or the ETF jets, typically I will hold about 50% of my shares for long term until I reach my ultimate target, which will be the pre-pandemic level. I will keep the other 50% for swing trading. That means I will buy and sell at those high and low points to optimize my profit. And after the third quarter earnings, I believe higher price targets will be set by the professional analysts. I'd like to remind you that if you are watching this video a few days after February 24th, you should check the update section below this video in case I've added update notes. Also, you should check my YouTube channel to see whether I have posted a more recent video on recovery stocks. I'd like to remind you that I would very much appreciate if you can click the like, subscribe, and notification button so you can be notified when I post new videos in the future. And as usual, I will very much welcome your comments, questions, and suggestions. To sum it up, my target for RCL, Royal Caribbean, is $134. For the Jets ETF is $32. And for Southwest Airlines, LUV, my target is $65 to be reached by the end of September 2021. At this point, I'd like to remind you that I'm not a financial advisor. I share my trading strategies for educational purpose only. You should make your own decisions with regard to buying or selling financial assets, and you should probably consult with your financial advisors before you do so. This pretty much wraps up my video for now. I will chat with you again in the next few days. In the meanwhile, I'd like to wish you the very best of luck with your financial investments.